just noon, so we'll give it another minute, but then we will get going. So
Sure.
we have to be mindful of people's time, but we did have 15 people signed up, so I am expecting some more to pop in. Unless there's more people here and I just can't see them all, which is a possibility.
I'm not sure.
But we'll give it, it's just noon now, so we will give it to 12:01 or 12:02.
Oh, that's fine.
We'll get going at 12:02. How about that? Thank you to those that are with us today. Just giving it one more minute, just to be sure no one else is hopping on. Well, and we're also recording this meeting, so I'm happy to send that out after as well. So, but I think I'll go ahead and start anyway with the introductions and just say welcome. Thank you for those that are joining. See, we had another person join, so that's great. So welcome everyone. My name is Kay Mello and I'm Director of Community Impact at United Way of Greater Waterbury. And my role with the organization is to be involved with our investments in financial stability for individuals and families in the Greater Waterbury community, and therefore work very closely with our speaker today, Faye Griffith-Smith from Yukon Extension. She has provided many financial literacy trainings for us here at the United Way and for our community providers over the years. Some of you may recall the Your Money, Your Goals training that we held some years back. We'll be talking a little bit more about that at the end of the session. I'm delighted to share that we'll be bringing that back, and we'll be bringing Faye back in person. But for today, she is with us virtually to present a financial wellness checkup workshop. So with that, I will turn it over to Faye. And one last thing I'll add is that if you have any questions while Faye is presenting, please feel free to type them in the chat. I will be keeping an eye out for those and sharing those with Faye throughout the presentation so that she can answer your questions. So with that, I will go ahead and turn it over to Faye. Thank you again, Faye, for being here today. We always love it when you present, and welcome.
Thank you so much, Kay. I very much enjoy working with United Way of Greater Waterbury as well. And I really appreciate being asked today to do this presentation. And this one is called Financial Wellness Checkup. And it's going to be an opportunity to review your financial practices. You received a copy of the survey sheet, I believe, in advance, and maybe you had a chance to go through that, or if you didn't, that's fine as well. We're very glad that you're here, and it'll just be an opportunity to review what you've been doing and maybe identify opportunities to help bring you closer to your financial goals. So with that, I'll get started. And I wanted to mention there's another name here. I've had a student intern in the past who helped in some of the development of this presentation. So I just wanted to give her proper credit, though she's not with me today. She's been a great help in the past. So I will go to our next slide. And so this is the basic plan for today. I'd like to do a little bit of introductions about Yukon Extension and myself. You could take this survey as we go along if you like, if you didn't have a chance to do it before. We'll go over the sections together. And at the end, there's a resource list that I wanted to share with you, which will be a slide near the very end. So that's the basic plan for today. And so to tell you a little bit about Yukon Extension, we are an educational outreach program from the University of Connecticut. We are based in the College of Agriculture, Health, and Natural Resources. And Extension reaches out into every community, every city and town in the state of Connecticut with our different programs. And you can learn more about us at the link that is listed there. And I encourage you, because we have lots of great information for people in a variety of fields, whether you're a consumer, a gardener, a parent of a young person who perhaps might benefit from our 4-H youth program, or our expanded foods and nutrition education program is another one that helps people stretch their food dollars. It's a great program I wanted to be sure I mentioned, and a variety of other programs, educational resources, and also we work with communities in a wide variety of areas. So that's a little bit about Yukon Extension. And then I just wanted to briefly mention about our financial education program through Yukon Extension. We provide a wide variety of workshops for both community and professional groups. We also have specific educational resources. I'll touch on some of those and can assist with program development. And we enjoy working and collaborating with others in communities throughout the state. And we also have a lot of information online as well, so you can learn more about us there as well. And now we'll start our financial fitness review. I wanted to share with you that this is work that was originally developed by a colleague of mine, Dr. Barbara O'Neill. She previously was with Rutgers Cooperative Extension and now has retired. And what I've done is I've taken this information that she's had and I've made some adaptations to it. And we'll be going through these different sections. And again, if you have questions as we touch on a topic, please feel free to put it in the chat. We can address it as we go along, if you like, or we can also answer questions at the end. So that is up to you, but let's get started. So our first section is going to be about basic financial management practices, and we'll be going over those questions in that section. So the first statement that we had is about, I have written financial goals with a date and dollar cost. An example is given here, but it could be any type of financial goal. It could be large or small. But the reason that we ask this question is because people who write down their goals are actually twice as likely to actually achieve them as people who certainly have dreams and visions for the future, but may not have written it down. There's something about the very act of doing that, that it's more like making a commitment to yourself about what you would like to have happen in the future. It's also an opportunity for you to begin to plan about the future that you would like. And on this slide, what I've put up is the SMART goals, and that's a technique that's very popular, not just with finances, but actually with many aspects of life and work. And the idea is that each of the letters in SMART stands for something in particular, and I've listed them here. I won't go over them now, unless somebody wants to at the end, but I will say it's a technique I myself have used, and it's really helpful to be able to get down to some of the details of what you'd like to have happening in the future, when you'd like it to happen. And the more detail that you can provide, that really helps you begin to plan so that you can reach this goal. So I can't say enough about it. Writing down your goals is a huge step forward towards achieving them. So that's why we like to encourage that one. Also, another item here is I have enough money each month to pay my rent or mortgage payment and other household expenses. So in this question, we're thinking about some of the real basic needs that we are likely to have. Certainly housing is extremely important. So that's something, we want to focus on as a basic need. And that's a good question to be thinking about. Are we able to pay the rent or mortgage payment? Are we having difficulty? If we are, it's an opportunity to either, try to find ways to work towards a point where we can pay the rent more easily or the mortgage, or to make other arrangements to help us so that we can take care of that need. So it's a good basic question to, and it's also an opportunity if we are having difficulty, it's an opportunity to think about what we might be able to do differently to help us in reaching the goal. And the next one that we have is I know approximately how much money I spend each month. So this is also important. This is really thinking about, on average, how much money do I or we typically need to meet our basic needs. So that's an important figure to have a sense of. And, if we don't have a sense of it right now, it would be an opportunity to check and see, to add our basic needs together, like our rent, our housing, our food, our utilities, basic transportation, and some other items we might also want to include in there and see what those add up to each month. And that'll just give us a better sense of where we stand. Okay, and then another one is I confirm my checking account balance or balance my checkbook before using it to make a purchase or pay a bill. And this item is just, checking in, making sure of where we're at before we perhaps take on another kind of expense. So that's important too, to just make sure that there's enough money in the account because we don't want to risk being overdrawn. And, if we're overdrawn, that can be a costly fee per each time, that we do that. So that would be important to help us stay on track. Okay, and I'll go to our next one. Okay, and then another item listed here is I plan for expenses that only come up annually or infrequently so that I'm prepared to cover those costs. So with this one, you might want to think a little bit about some of those bills that don't come up every month, but they do come at some point, either in the year or over even a longer period. So that might be something like, let's say, maybe a property tax bill on a car or on a home. And those sometimes there are things we might like to forget, but it's best that we don't forget them. It's best that if we can, we try to remember when those bills might be coming, and so that we can have a plan, so that we can try to have that money together for when that bill is due. So what I'll say is I've found that A lot of people seem to be quite good in managing their regular expenses, but it's easy to be taken by surprise by some that only come up occasionally. Another type of bill that might be infrequent might be something like, let's say, auto maintenance. Hopefully, it's infrequent. Sometimes it may be too frequent. But if we've got a car, we know that it's likely to need repairs. And as it gets older, it's likely to need them probably a bit more often. So it's just a good idea when we can to try to prepare and to plan to put ourselves in a position so that we may be able to take care of these bills more easily and to anticipate them so that we're not surprised quite so often. So that can be helpful. Okay, another item that we want to talk about is going to be I keep organized financial records and can find important documents easily. And what that makes me think of is something like maybe taxes. Not that long ago was the deadline date of April 15th. So having your records together, having a place where you keep them, where you know you can go when you need to pull out information, a receipt, or a record from the past is a really helpful thing. It can reduce our stress. There's various documents that we need at different points in time, and having a good way of keeping those records so it's easy to find, so that they're readily accessible, can be really help reduce stress. So it's a good idea to have a specific place, in our homes to keep those records and to keep them up to date so that our records are going to be there for us when we need them. So I think, that is a key thing to keep on top of. And then next, we are going to talk about feeling comfortable in discussing money matters with my family. So in this, we're kind of thinking about your household members and suggesting if you are comfortable to include them as it's age appropriate in discussions around money so that they understand, the situation that the family may be dealing with. And that's a very personal thing, depending on your comfort level, your unique situation. But when possible, we think it's helpful to, in an age appropriate way, share information. It could be very general about finances. And to also, it's a great opportunity for younger members of the family to learn a bit about finances because we don't just automatically know these things. It's important, in terms of their understanding that money is often limited, that we may not be able to do everything that we'd like at a particular point in time, but we can plan how we use our money and to try to make it meet as many of our needs and hopefully some of our wants as possible. So that's something to consider, what your comfort level is with that. Another item that we have there is I take steps to reduce my risk of identity theft. And I think that, hopefully we're all aware that that's so important for us to protect our identity and to limit the amount of information that we share, that we might put out, let's say, on the internet. And, when we are asked for these items, we want to make sure that it's for an appropriate purpose. And we also might want to know about how others safeguard our information. So I think that's extremely important to consider these days. And then another one that we also want to talk about is calculating my net worth. Now, this one, what net worth refers to is it's taking everything that we own, all of our assets, and it is subtracting all of the things that we might owe, our liabilities. So it's really kind of a complete overall financial picture. And if you think of it as a snapshot in time, that if I'm preparing it, let's say in the month of April, that it's a snapshot of where my family and I are at this point in time. And a reason that doing a net worth statement might be important is if you go for a mortgage. Typically, this is something that you would need to either provide or to provide this information to your lender so that they could assist you in creating a net worth statement. It can also be a measure, like if I did it, let's say today, and then in a year from now, I want to look at it again and hopefully see that there's been some improvement, which there may or may not be, depending on the year that I've had. It can help you also in thinking about planning for retirement, or if you are going for another kind of a loan, this information would also be helpful. So that's why we mention about creating a net worth statement. And I'm sorry, I'm realizing I'm a little behind with the slides. This one was on occasional expenses. And the reason that I chose this one with the holiday bunting is I was thinking of the example of when someone is maybe plans for a holiday celebration, and as we're almost in May, I was thinking about the holidays like Memorial Day and the 4th of July and also Labor Day, all the summer types of holidays. And maybe in your family, you're the one who plans the picnic. And so that might be an occasional expense getting ready for that picnic. So I just wanted to catch up a little bit here with the slides. Okay, we'll go on to our next item here. So these are the financial management items that I had encouraged, and the calendar there can be a great tool when working with your finances to make sure that we keep on track. So now that we have gone through all of the financial management topics, we're going to go on to saving and investing. So with this one, what I'm going to mention is I've got particular questions or statements in this one, and we could certainly change this up a bit as we go along because, the questions in this section may depend on where you're at in life, and there's different ways that we could look at these. So I'm going to come up with a few alternatives here as well. So let's get started on the saving and investing. So one of the things that we want to talk about is saving for long-term goals. And that's really important. We want to think about our future and how we're going to get there. And particularly with large goals, like let's say if we're thinking about something like further education, maybe for someone in our household, or maybe we're thinking about buying a house or moving to another location, or even retirement. That takes some planning. So it's good to help us all understand that it does take time, and we want to think about how we're going to get there. Another important matter to consider is setting aside money for an emergency fund. There's also something called a sunshine fund, thinking about the good things, opportunities that you may want to be able to take care of in the future. When there's a good opportunity that comes up, let's say you're invited to go on a trip. And wouldn't it be nice if you have a bit of money set aside that would help you take advantage of that opportunity? So we want to think maybe both about the emergency fund to help us through challenges and a sunshine fund for the maybe more enjoyable opportunities that may come up so that we're prepared and can take advantage of them. So on this one, thinking about briefly about the emergency fund, it on my form, I'm asking about a $2,000 car repair. And though I know $2,000 seems like a lot of money, I've found that when it comes to car repairs, it's not that hard to come up with a need for your car that amounts to $2,000 or even more at times. So probably for, many of us, if we have a car, that's important to help us get to our jobs, get to other family members, to also be able to do some fun things. So keeping that car repaired is super important. And we might think about other things. I know one that I can think of, not last year, maybe 2 years ago now, was one morning the furnace was not working. And of course, it was a really cold morning. And a furnace is really important, especially in the winter. So that was a need that we wanted to be able to address quickly. And though it is, might be able to put it on a credit card, it would be helpful not to have to use credit or reduce the amount of credit that we, needed to use to be able to get that repair. So an emergency fund can help with something like that. It may be something smaller. It may be, let's say, a medical need, which could be larger or smaller. Maybe it's a trip to the emergency room or something like that, and your insurance may require that you pay a copay or a deductible. So being prepared for those situations, if we can help reduce stress. So I think, that's an important factor to consider. Okay, so we'll move on. The next item that I have is I have at least 3 months of expenses set aside in a readily accessible account. And this could be like a money market mutual fund. It could potentially be like in a high yield savings account. It could be in another type of an account. It could be in regular savings. It is important to have money that is accessible, at least a portion of that money is accessible quickly. And there are different figures that we could use on this. Normally, what I would mention is if you're in a more stable position, 3 months or even 6 months worth of basic living expenses can be a great goal. And that may sound like a really big goal, but I think the important thing here is if that's, we're not in a position to do that right now, it might be something that we could work towards over time. And the idea, again, it's just a cash cushion that can help us should there be a sudden type of need so that we're able to address it. And I just like to encourage people, if maybe you don't have an emergency fund right now. And now might be a great time to start to work on that over time. Even having $400 or $500 that you can keep set aside and try not to touch, that can help you through a difficult time. That can help reduce the stress of an emergency type situation. So we just like to encourage people to consider, if it's something you don't have, over time, by saving a small amount, either each month or even each paycheck, a few dollars, whatever it is that you can save towards that, and doing it on a regular basis. If it's $10, if it's $5, the important thing is saving regularly over time and having that habit, developing it. And over time, it does add up. So that may be something to consider. Okay, I'm going to go to our next. I also wanted to mention with some other organizations, coordinate something called the Connecticut Saves campaign. And when I say campaign, it's a social marketing campaign. And the idea is to encourage people to save regularly for the goals that they have in life. And what I want to mention here is this in no way connects to your finances. You can take a pledge, which is a promise to yourself that you would like to save for a particular goal. And I'll mention the partners that I have in this are the Connecticut Department of Banking, the Connecticut State Library, also the Connecticut Association for Human Services, and also Chelsea Groton Bank. And we more recently also had join us the U.S. Department of Labor, Employee Benefits and Security Division. So those are some good solid partners, and we work together to encourage people to take steps to move closer to reaching the goals that they've set. And you can learn more at connecticutsaves.org. And it's the pledge is also, it's like writing down your financial goal. So it's just another method or technique that you can use to help reach your goals. Okay, we also want to continue on with the idea of, when you receive an increase in pay, that's also a good time to consider even bumping up a percent of any savings that you're able to do. To make even a slight increase at that time is good. Automatic savings is one of the best ways I think that we've had to really encourage people to save. Some other things that we want to talk about would be retirement and the importance. I know that there are fewer and fewer pensions available to people, so it's really on us to make a plan for our own retirements. Our employers may help us with that, with some different particular savings products, some retirement savings products. So it's good to be aware of what our employer offers. And if it was something you were not able to do in the past, it's something that maybe you can consider and look into, or at least make sure that you're informed about what opportunities your employer may provide or what other opportunities might be open to you to help you save for retirement. So I think that is extremely important. And even for young people who, we know may be starting out, um, at a starting salary, typically lower salary, even if they're able to set aside the minimum amount for a particular type of retirement account, that can be beneficial. So it's good for people to consider where they're at, what their needs are, and is this, a good time to make a plan for the long term. Another question or statement that we had there was, I have money spread across more than one type of investment. And on this, some examples mentioned are stocks, bonds, mutual funds, even certificates of deposit. And it's just a good idea. You've probably heard, don't put your eggs all in one basket, that some diversified investing can be good, even if it's small dollar amounts. So that's something to consider. And then another item here is that to consider the after tax yield of my savings and investments, that it is greater than the rate of inflation. And inflation, I know, is something that we've been living with over the years. It can fluctuate quite a bit. And I've got an example here of how you might go about checking on this. And this might not be where we're all at today, but I just mention it because it's important to consider the impact of inflation. For example, if we have money in just regular savings account and that is paying interest, which is good, but maybe paying a low rate of interest, maybe there's other places we might be able to keep a portion of our funds so that we can earn a greater yield. So this is the example of how you compare, how you find the after-tax yield is you take the pre-tax yield, multiply it by 1 minus the marginal rate. The marginal rate is the rate of taxes you're paying on your last dollar or your highest dollars. And so in this example, we look at a taxable bond that has a yield of 5%. And the marginal rate for this particular investor is 24%. So that depends on your tax bracket. And again, that's your last dollars. It's the rate that your highest dollars are going to be taxed at. So we do the math to find our after-tax yield. So we're taking the 5% and we're going to multiply it by the 1 minus 24%. And we're finding that the after-tax yield would be 3.8% for the taxable bond. And in this particular example, which the current rate of inflation for the past 12 months in the US was 3.5%, and that is current as of March. And so you can see that the yield of this taxable bond in this case is slightly higher than the rate of inflation at 3.5%. There's a 0.3% rate difference. So in this example, this individual could do a little better with the taxable bond yield at the 5%. Now, this, may not be where we're all at, but as you may consider, investing, as you look at your investments, this is something that you might want to take into account because inflation, as we all know, kind of has its impact on our finances. Okay, we're just going to briefly touch on insurance and estate planning because this is a review. And so the whole purpose of insurance is really to protect us against large risks. hopefully over time, we either have or we work to a point, where we have some savings to help us handle smaller risks. But for the larger risks that would be difficult for us to deal with, let's say if we have a home and we're thinking about the potential for property damage, there's a bad storm and a tree comes down that can cause significant damage to a home. And certainly it can have a lot of impact. So we might want to review any insurance policies that we have, because you know how it is, it gets easy to renew our insurance, but over time our needs may change. One of the things certainly we've seen here in Connecticut and a lot of other places is that our home values may have increased, and also the cost to repair our homes also may increase. And also, thinking about things like our health insurance. Another thing that I wanted to mention, and I'm wondering, I don't know if anybody has the answer to this. This is a question for you. What is your greatest asset in general? Anybody have an idea on what your greatest asset is? And if you do, you could put it in the chat, and I'll rely on Karen to let me know if anybody is going to answer that question. So what is your greatest asset? Anybody have any thoughts on that one? Is anybody tempted to answer that one, Karen?
Yes, actually, we had property, like a house or land.
Mm-hmm. Okay.
Anyone else?
That's a good answer. I'm going to have a kind of a different answer for you, though.
Let's see. People to like you to advise us. Well, that I agree. I do agree with you that Pat, that Faye is definitely an amazing advisor, and that's an asset to us all. Oh, and then we have mindset. I was sort of going there too. And greatest asset is maybe ourselves.
That's a very interesting point. I like that very much. And I'm going to tell you where I was going with this, and it's interesting, is our greatest asset, which I think we sometimes forget. If we're thinking in a financial asset, I love the mindset because I would agree that is incredibly important. So thank you for mentioning that. And property makes a lot of sense. But our greatest asset is our ability to earn an income. If you think about it over time, over the years, that is a great asset. If you add it up, there's a book called Your Money or Your Life. And I think one of the first things that they suggest you do is consider all the money, add up all the money that you have earned in your lifetime up to now.
Mm.
That's kind of an amazing thing to think about that. I don't think we often would think about that. And my goodness, to kind of think, oh my goodness, I've had all this money over this time. Where is it all? We know some of it, and we could try to recreate it would take a lot of time. But the point is, if we're thinking about insurance, if our best asset is our ability to earn an income, then have we thought about disability insurance? Because if something happened to us that impacted our ability to do our jobs, that could have a serious impact on our families. So there is something called disability insurance. And some people get it, some people don't. Most of us will hopefully be very fortunate and make it through our working life without a type of disability that would keep us from working in our, our regular field and the jobs that we're hopefully, well suited for, that we enjoy. And the thing of it is, if something, happened, maybe it happens and it's physically I am not able to get to work. Now, the great thing is maybe I could work from home with certain kinds of jobs. Maybe I would need to get a different type of job. Um, so I just mentioned disability insurance because it's not often thought of. And another thing that I put in the list, I added to it, was long-term care insurance as we get older might be a consideration as well, to make sure that we can get, the kind of care that we might need. And the reason I mention that one is because both my parents had it and they needed it, and it was a tremendous help to us in their later years. So it's something that can help, like bring someone into the home to help support and provide a portion of the care that might be needed. I'll also mention it can be quite expensive. It is less expensive at a younger age, as insurance in some cases is. It's just something to think about. It's not that all of these make sense for everybody, but it's just some things to consider. Time passes, and I've got to say, it passes amazingly quick, and our lives change, our needs change, what we're focused on changes. So, just something to think about. Another,
I'll
I'm
just
sorry,
add
was it?
that, that's okay. I'll just add that Pat typed in the comments. I think as well in high school, aging myself, we took Latin and physics and no financial type courses were offered. That perspective and insight is likely much more critical for all to learn when young. Thanks, Pat. Agreed.
That is a great point. And one thing I've just got to say, I'm so pleased with is that, and you may or may not have heard, last year, it was either June or July, Connecticut passed a law that all Connecticut high school students, starting with the class of 27, will be required to take a personal finance class, a semester long. And I did not take one in high school. I actually remember there was a portion in an economics class, but it sounded like only a class or two where they touched on personal finance. And I knew I wanted more than that. But I remember wanting it at that age. And I'm just so pleased that our young people will have this opportunity to get this really important education, because it is
It's
going
great.
to be important to their future. So I think well, let me put it this way. There are 25 states that have passed similar legislation. So there's another 25 perhaps to go, hopefully, because all students do deserve this. I've got to say it. Um, so what I want to mention is they're working on getting the schools ready to provide this education. Some schools have had an elective type of course on personal finance, but not necessarily all students could get in to take it. So the future, I'm glad for the young people that they'll have an opportunity to get this, which they may or may not appreciate right now. But hopefully in the long term, they will really benefit from this. So I'm glad that you were pointing that out.
Yes.
That's
So
that's
Faye, I
good.
just want to let you know we have about 10 minutes left if you wanted to wrap
Sure.
up your points, and then we can
Yeah.
leave a little time in case anyone has questions.
Sure. So I'm going to go through it kind of quickly. Having a current will, if we don't have a will, the state has kind of a one for us. It's about the way that they would distribute our funds. So it can be a good idea to make the decision yourself about where you might want any assets to go. Again, probably long-term thinking, but a great idea to plan for where you would like your assets distributed. The others, let's see, credit and debt. This one I would really like to talk about more, but I will just say quickly that it's a good idea if less than 20% of our monthly take-home pay goes towards our credit cards, student loans, car payments, other items of this nature. When we go beyond that, if we're a renter, it becomes more challenging. If you're a homeowner, this is the range you see on the slide here that is suggested. And I understand in Connecticut, housing costs are very high. This is a big concern for many, many people. And it's when I have worked with people and I've seen people getting over like 40% in with their mortgage and other home related expenses, it often is a concern because then they don't have enough money for other expenses. So I find this to be a good rule of thumb. Is it easy to follow? Not necessarily, but I think it is a helpful guide to begin, with planning. So that is suggested. Free credit reports, those are so easily available to us now. It's a good idea to check them. It used to say once a year. Now I would suggest at least every 6 months because you want to make sure that the information is accurate. If it isn't accurate, you want to get it corrected as soon as possible because, as we know, your credit report, your credit score can affect what you are able to do financially in the future. So it's good to check on that on a regular basis, and they're available for free. They used to cost, but they're available for free. So that is a wonderful thing to be able to do. Go to the next slide. And this one is, just another slide I wanted to show. This is when people are having difficulty paying their bills. I like to have them write down what they owe, how much they owe, if there's an annual percentage rate being charged, what their monthly payment is. It's a way to get organized and to look at the bills together and to begin to work on a plan, either to work on your own plan or to get help in working through a plan. So that is important. And I'm going, oops, there's the whole thing. So what I'll wrap up with is I want to show you a couple things. There is a score. And while you can look at this score, I'm just going to go over the consumer behavior. Comparison shopping, or whether it's a major purchase or even a service that you want to be purchasing, it's a good idea to compare at least three sources. And then avoiding impulse purchases as much as possible and trying not to use shopping as a form of recreation, also a good idea. And this is just kind of a suggested scoring. And for any of us, it's hard to necessarily get the highest scores. But if we didn't get the highest scores, that's okay. This is an opportunity for us to identify some things that we want to work on. And I just have one more thing. That is, these are some suggested resources that I wanted to share with you. These are good resources for consumer information on a wide variety of topics. And I think I'll end it there. And I want to turn it over to Kay now. So, Kay, why don't you go ahead?
Oh, sure. I did want to see if anyone had any questions. Feel free to unmute yourself if you have anything you'd like to ask of Faye, and then I have a couple of updates after that. Or you can feel free to type a question in the chat. I'll just go ahead and provide the updates from this. Thank you, Faye. I mean, this was amazing. We could talk about this for probably hours, right? And we're always so delighted to have you. You're a wealth of knowledge. But what I really wanted to share with the group is that Faye will actually be coming out to the United Way beginning at the end of May, May 30th. We're going to have a 3-part series that she's going to present on the Your Money, Your Goals financial empowerment toolkit. And this is a train the trainer course. So I'll be sending out the invite to all of you on the call. We're focusing on providers, social service providers from Waterbury to attend this course free of charge. We have about 19 spots for this first session of 3 classes. We hope to do more in the future, but she'll be going more into depth on many tools that can be used for yourself and for your clients on budgeting, savings, debt, banking, and more. So she's a wealth of knowledge. So I hope that as you think about the webinar from today, that you'll share this with your staff and anyone that you would like to invite to join us for that cohort of the 3 classes. It begins on May 30th, it's Thursday, and then it will continue on Thursday, June 6th and Thursday, June 13th from 9 to noon here at the United Way. So I will send that out in an email. I have all of your emails. I will send that information plus the recording from today, plus Faye's wonderful PowerPoint presentation as well. Anyone have any questions? I didn't see any. I think someone is typing now. We'll just
And
hang
I
on
just
for
like
a minute.
to One thing
Yeah.
I'd like to mention is that the workshop series is also interactive. So I love that it's going to be in person, and there are some particular activities in there that I think are a lot of fun. So I really look forward to providing that workshop and hope that some of you might take an interest in joining us.
Sure. So everyone's saying thank you to you, Faye, and amazing job as always. And yeah, so we will be sending out the information and hope you can join us starting on May 30th and have a wonderful workshop from Faye in person. Thank you all, and thank you again, Faye, for everything you do for United Way and for financial literacy for people all over the state. We really appreciate you.
Thanks, everybody, for attending.
Have a great day, everyone. Thank you again, Faye. Really appreciate it. That was amazing. There's a lot of information too, to try to get into the hour. But you did it.
Right, right. And I will send you the newer one with that update in it.
Perfect. And then I'll get an email out with all that information and I'll copy you. And then we'll be in touch again.
Right?
And great. Have a good rest of your day and week.
Thank
Good
you,
to
you
see you
too.
as always. Bye.
Great to see you. Bye-bye.
Bye.